Okay, this is the close. We're going into May 19th now. So in 2 minutes, this broker is going to close up shop. Every broker in Forex is going to close up shop. Now look at how you come towards the end here. I'm kind of getting out of whatever my winners are, because right now the spread is 1 pip, and this broker typically runs a half a pip or below on the euro. So anything that's and this is right down to the second, anything that's open and profits, I'm getting out. Now if something is slightly winning, I might let it go, but I'm going to get out of almost, well, hopefully everything's going to be a winner here at the end. I'm going to get that climax move where we get the final thrust of the day going into the end of the session. And it's getting dicey right now even, so the spread just got super wide. It just went to 1.3, so I'll probably get out now, not wait for the top of the hour, because it's just going to be a mess there. So now I'm down to just, I think I got 2 positions left where I got in earlier. I don't know how old these orders are. Let's see, this is the 5 minute. Now I have 1 more minute, and if anything else is in profit, I'll just get the hell out. And then what I'll do is I'm going to start placing these buy limits. I can still place these buy limits now before the close. A big grid entry. Okay, you got about 10 seconds here. Well, it just turned 5 o'clock. Now that actually won't let me trade now, I don't think. See, they won't even let me. That's a lot. Some brokers close their doors. Now the spread just went tight again. This broker plays antics with the spread. For the next 5 minutes, I don't think I can even trade. So it's just as well, because you're ending the session and a whole new session is beginning. In the 4 hour, we just got our first line turn on the 4 hour. So now we can draw. We can at least see that this was a nice projection into that, and this would be a widening triangle formation, I guess you could call it, or something, expanding, whatever. But really what matters is what's the next thing. Well, the next thing is I want to trade the retest of this, or even come all the way down here again. So that's why I'm stacking up. And some of these orders are ridiculous, because you may have a plunge that's unsustainable. The market's not going to keep plunging, so I want to trade the retrace on that, because I just think they're really great trades. Like here, this smash and grab comes down, retests this bottom, and just takes off. So you have pending here at this bottom, and that's the set and forget. Of course, it took about 16 hours to get filled on that, but and I guess your stop would have to be, if you're going to go with the last known support in bar form, or this. I'd also have a buy limit there, though. So sadly, I'd buy this whole zone. But I'm really not planning on the market behaving anything rationally. Okay, now we got our double top became a bottom, and here's a possible pivot for an explosion up. But I'm already in. But I got out of most of the stuff because since we are at the pivot retest, I'm dumping. So that's like the pivot I'm trading is the clearinghouse, is the rollover of inventory. And the true decider whether you're overstocked or understocked, or I guess I would call it overbought or oversold. In other words, you bought too much inventory and sold too much, And now it's easy to put in these trend lines. So we'll put in this one, and we'll put in that one. We're in the process of breaking that one right now. So, like I said, this would have been my exit here, and it still is my exit for the longs. I'm in 2 positions, and I traded this 10 pip bounce here, and if you were to go to the 5, it would have been, there'd have been more trading, because you had this triple bottom on the 5, and you would have, had a buy limit there, which you got filled, then you got refilled. You didn't really make it, you made only about 8 pips on that, but okay, so now you're in the process, and of course, depends on your lifestyle. Of course, you don't have to trade 5-minute charts. You can put up an hour chart or a 4-hour chart and just have these, orders, or you could be on the daily. So I have the daily here. This is the 4-hour, and this could be anything from 1 minute. Of course, 1 minute's a little squirrely. You're going to have to be pretty fast on the draw. You might actually have to trade that at the market, where this top within the bottom, in other words, doesn't last too long, that trade. See now that the session, you got 1 minute before this broker is going to. Now this is where this broker goes nuts. Now look at these spreads here. I got caught in this one time. I forgot to get out. See now those 15 minutes guys just disappeared. I got caught in this drama here one time, and I thought, you got to be kidding me. This went on for an hour, where the spread was just ridiculously wide, and I was like, really? Like, look at that. Now this is what people complain about, like, oh, they took out my stop, the broker's playing. No, there's nobody trading this thing. There's nobody holding on to the other. I mean, everybody's kind of this. So the market's open 24 hours, but like the guy said, like the Stephen King joke, the guy comes up to the store and he says, and the guy's locking the door. He says, "What are you doing?" He goes, "Well, closed, And he goes, "Yeah, but the sign says open 24 hours." And Stephen Wright says, "Come on, your sign says 24 hours. What's the story?" And the owner says, "Yeah, but not in a row." So yeah, it's open 24 hours, but it's definitely the guy's got to go to the bathroom. Oh yeah, this is really kind of like the bizarre. But now this is when the market makers supposedly established their trading range here into the next session, and it's only Monday, so the week's young. There's plenty of pips to win and lose. You'd have to say that though, if you did one level of zoom out here, we're still in the 15-minute down channel. So you set these guys up. You can print them out if need be, and we're kind of spilling out of that. But it just gives me a place that I can put orders in. And if you go to the 30-minute, we may have to come all the way back to here, because this is going to be like one of those frustratingly long rides back to this price. 1256 or something. I don't really care. I guess I'm only worried about these these horizontal lines, which represents 10 pips of up or down. But yeah, I would certainly look forward to, you could be short right now. I typically like to buy. It just seems hard to picture something bouncing off the roof, although this was a scalp up here, but yeah, I don't like the breakout trades so much. I do like these. In other words, market comes down here, and it just fills all my buy limits, and then zoom. 30-minute rally, and I just pocket every limit that I've accumulated, just like I will here. Of course, this has to happen in a certain time period, and I'm laying these orders in, and the longer the order lasts, the further away it is from current price. So here, this is super deep, but that's going to last about 2 hours, and here's when it lasts 3 hours, but it's naturally deeper. So even if I'm not here to trade this, say I went somewhere and the market's right here and I dropped this big iceberg grid that lasts so many hours, if it spans at least, I guess it'd have to be about a 40 pip span of orders. Of course, not every order is on the same. If you lay it, the system I built here, which is not really an EA, it's just static, just kind of bizarrely written grid retrace bounce orders. Now this one's going to last 12 hours. I'm kind of actually leery of putting these 12 hours in, because I'm going to be back here for 12 hours. But just in case I pass out, fall into a coma, I want to wake up with money in my account, because this came down here and then it went up. And that to me, and here's a stop. So I could either have a master stop on that red guy, or I could have a stop on each order here. And the risk to reward ratios, if they're break even or better, you probably want to go with whatever better is. Now, if you think about the fact that most people trade, I don't know what most people trade, but it seems to me most people, if they got a mini account, they're trading 10K. If they got a standard lot account, they're trading, or even if they've got a micro, they're trading a standard lot, or they're trading, which the broker's default when you turn on one-click trading in here. The default is a standard lot, $100,000. Now, if you're trading like that, maybe you can't afford to get in like this, but if you think about these all being 1Ks or 10Ks, as the market's plummeting, you have a master stop here. If that's how you trade, and that's how I trade, like, I mean, if I see a market plunging like that, the first thing I'm thinking of is, where do I buy? Because this is really catch a falling knife theory. It's not, I guess like people would call it martingale, but, martingale is kind of just like a little different because my orders are going to disappear. In other words, the market has to do a scenario, and I'm giving it a time limit. It's got to hit it and quit it. It can't be like as it keeps going down, to keep buying. Well, no, this won't keep buying because it may buy for the first. In other words, if it can plunge 30 pips in an hour, yeah, it'll fill that bank. But if it takes 2 hours, it's only going to fill the 2 hour. If I overlapped all these so that this was actually a 4-hour order. If I set this timer on that one to be 4 hours, that's very aggressive because, I mean, I'm saying for the next 4 hours, I will buy this thing as it plunges. And, I mean, this is kind of, this is definitely not trend trading. But this is staggeringly, if you can handle the getting filled on these buy limits as it plunges psychologically, it's worth it because if I put an order bank that, and you can write these order banks in any kind of formation, they could be Fibonacci numbers, I like the linears and I like the logarithmic. Now the linear, I know if I wrote this and called it linear, I would know that, okay, that's going to get in. And this looks like a linear one. Of course, no, this looks more logarithmic. In other words, it's going to buy here, and then it's going to buy even more the deeper it goes. So, and that's how I think about the market because, say you did that here. Of course, you only made 30 pips on this bounce here, but you got to realize these things are disappearing in time. This is a half-hour chart. So the only thing that would be left here, if you're going to buy 8 hours, in other words, the order lasts for 8 hours and it's 80 pips away, then if this was 8 hours down into here, it would fill on everything that was 80 pips away. So this is 20, 30, 40, 50, 60, 70, 80. It would only fill on that bottom order. So if it's price over time, these are my favorites. Here's a half hour, right? Now this is, I would put more orders in a half hour than I would put in a, actually that should be a bigger order, but this 15 is a lot of orders. Because this is really this does happen in Forex. And when the market's tanking fast, I will throw these in because they're really running way out in front. Like earlier here I did it. And you can do the same thing on a stop entry. Here's my stop entry. This lasts for 15 minutes. So now we're into the next session here, and the spread's kind of tightening up a little bit. So that's the 5 minute. I'm going to start putting buy stops above. And what I tried to do on the buy stops was, if the buy stop lasts for a long time, like here's a 12-hour buy stop, it's actually going to be like that guy that I was complaining about that put his orders too far away from current. But that's okay, because if that order is going to last 12 hours, it's going to definitely be a breakout of this 1 hour bar. That's not so bad. And the market's quieted down. We're living, for the past 4 hours, we've been living in a 20 pip range. And I'm expecting it to come down here. And if it doesn't, it's okay. So I'm a buyer on stop or on limit but I typically don't trade at the market unless I'm sitting there and I'm thinking,